Assalamualaikum. Today, my group and I will present our tax planning solutions based on the case study given. First of all, I would like to introduce myself and my team members. My name is Puteri Ereena Batrisyia, and my team members are Khairisha, Aidatul, Najwa, Rafa, Khalida, Farah, Adiba, and one Alya. Now, let's proceed to solution for question 1A. Question 1A. NUCO should be set up as a subsidiary of Recton Private Limited. It is because subsidiary company is a separate legal entity and has a different identity from its holding company, and they maintain their own separate accounts. Next, the subsidiary company is considered as Malaysian tax resident, therefore they are liable to tax. Since NUCO is a company with paid-up capital of 2.4 million, the company will be subject to a two-tier tax rate of 17% and 24%. Furthermore, since NUCO is a manufacturing company, the company may be granted pioneer status or investment tax allowance for a period of 5 years under the PIA 1986. They are entitled for tax benefits and deductions. Meanwhile, a branch is not a separate legal entity. It may be the joint or separate maintenance of accounts. Branch is also only suitable for short-term basis. If NUCO is to be set up as a branch, it will not be considered as tax resident in Malaysia. Therefore, the branch will not be entitled to any tax exemptions or government incentive available. In conclusion, NUCO should be set up as a subsidiary company rather than branch, because NUCO would be entitled to tax benefits and deduction, therefore the amount taxable will be lower, thus tax liability will also be lower.
Hi, I am Rafa and I will proceed with question 1B. NUCO should commence business during the financial year end 31st December 2020 because the tax liability in 2020 is lesser than the tax liability of 2019. Since the paid-up capital of NUCO is 2.4 million, means that NUCO is an SME and the estimated gross income per year is 1 million. The estimated amount taxable for the year of 2020 is 198,000, where the first 600,000 would be taxed at rate of 17% and the subsequent 400,000 would be taxed at rate of 24%. Meanwhile, the estimated amount taxable for the year of 2019 would be 205,000. The first 500,000 will be taxed at rate of 17% and another subsequent 500,000 are taxed at rate 24%. Therefore, NUCO should commence the business in the year of 2020 because they will pay less tax. The answer for question 1C is reinvestment allowance. The reason is because reinvestment allowance is commonly known as a second round incentive for companies which had exit from the tax holiday of pioneer status or investment tax allowance. Since NUCO plans to expand its manufacturing business by incurring more capital expenditure, the company may claim for investment allowance after finishing claiming investment tax allowance. Reinvestment allowance are available for a period of 15 consecutive years of assessment, beginning from the year of assessment in which the capital was first incurred. A flat rate of 60% of qualifying capital expenditure incurred for the business will be given to the company as reinvestment allowance. If the reinvestment allowance exceeds 70% statutory income, the unabsorbed reinvestment allowance can be carried forward to be set off against future statutory income. In such circumstances, the amount credited to the exempt income account is 17% statutory income.
Hi, I am Farah Adiba. I will answering the question as stated on the screen. Pamkas Sedang Berhad are advisable to dispose the machineries on a financial year end on 31st March 2021 because it fulfilled the requirement of 2 years of ownership in order to avoid the clawback of the capital allowances. Where machineries is disposed of within 2 years of acquisition, the tax authorities would claw back all the capital allowances given by way of balancing charge in the year of disposal. That's why timing of sales is very important. Next question. There are two ways for PAMCA to save tax on disposal of the stamping machine, which is the first one, the assets that generate balancing allowance should be disposed at year end, which is held on 31st March 2020, rather than next year to get balancing allowance in order to conceal adjusted income. The residual expenditure exceeds the sales proceed, therefore, the income will be reduced with decreasing value of tax payable. Besides, in order to defer the tax liabilities, assets that produce balancing charges should be postponed until the next year rather than being sold at year end, which is on 31st March 2021, or else the tax payable will increase due to increasing amount of income. The residual expenditure less than the sales proceed.
Assalamualaikum, my name is Alya. I will proceed with question 2C and D. Dalmo Berhad holding 75% ordinary share in Damchi Sdn Bhd, 90% ordinary share in Bamcha Sdn Bhd, and 80% ordinary share in Ruba Sdn Bhd. Since the definition of related companies require at least 70% holding of the ordinary share, Damchi, Bamcha, and also Ruba Sdn Bhd are related companies to Dalmo Berhad. However, for the year assessment 2020 and 21, although Bamcha Sdn Bhd has current year loss of 600,000 and exceeds 70% of ordinary share, Bamcha Sdn Bhd is not entitled for group tax relief since the company paid up capital is only 2.3 million. Therefore, it cannot surrender its loss to Dalmo Berhad. Ruba Sdn Bhd is also not entitled for the group tax relief. This is because Ruba Sdn Bhd not eligible as it currently enjoying investment tax allowance. Damchi Sdn Bhd also not entitled for group tax relief. This because the company just finished claiming pioneer status after 5 years of operation. In order for Dalmo Group companies eligible to claim group relief to reduce tax liability, Dalmo Berhad must at least have 70% of holding ordinary share in Damchi, Bamcha, and Ruba Sdn Bhd. Other than that, claimant and surrendering companies must be resident in Malaysia and must have paid up capital more than RM 2.5 million at the beginning of the basis period and not currently enjoying certain incentive. Both claimant and surrendering companies must have same accounting period year end. Therefore, if all the conditions of group relief loss are met, surrendering companies can surrender their loss to the claimant companies, and the amount of current year loss that can be surrendered to the claimant company is restricted to 70%. Any amount not surrendered during the year assessment would be carried forward to the next year assessment. The best method of financing its purchase of new machinery is through leasing, since it will help to minimize the tax liability. This is because the company is not entitled to claim capital allowance on the leased asset, as the company is not the owner of the asset. The company is entitled to claim for full leasing charge as a revenue expenses. The claim of lease rental would be the most advantage because of the full amount of lease rental is given revenue deduction in the year of incur, while if claim of capital allowance, it need to spread to the various year in accordance with the specific rate of capital allowance. If the business has a current year business loss, the leasing charge will increase the adjusted loss. If the current year business loss cannot be utilized in that particular year at aggregate income level, the unabsorbed business loss can be carried forward to the future year to set off against any business income at the statutory income level.
Assalamualaikum, I'm Khairisha and I will be responding to the last question shown. Damchi is advisable to take over K1 Sdn Bhd and the method of acquisition is by acquiring the assets. The tax attributes such as unabsorbed tax losses, capital losses, and any tax incentives or exemptions may not be transferred by this method. However, new tax incentives may be applied and claimed for when he is eligible. Moreover, transfer of value of fixed assets will be disregarded and will be entitled to claim annual allowances with restrictions applied. It is also possible to attain certain parts of business, though you need to carry out limited due diligence exercise on assets acquired. Lastly, interest incurred to fund the acquisition of assets that will be used in the business would be tax deductible. That's all for our group presentation in this video. Thank you for listening.